Welcome to Notepad. I'm your host, Ibrahim Sani. This week, we've seen some interesting movements on Bursa Malaysia because Mr. DIY is currently being listed. This is, of course, one of the biggest IPOs that we've seen in 3 years. If they are doing well for the entire week, they are going to be clearly top 40 or top 30 biggest companies on Bursa Malaysia. And this have reinvigorated the idea that a lot of companies want to be listed on Bursa Malaysia, largely because it is attracting a lot of a myriad of investors, from institutional investors to retail investors. And because of the movement that we've seen politically in the country, some investors decide to, I guess, take some profit taking, and we've seen how the KLCI has dipped towards late of last week. But also because of some of the political issues seemingly have been resolved, the KLCI has bounced back, and this includes some of the companies bouncing back as well. So those are the kind of events that are currently happening right now on Bursa Malaysia. But one thing that we have to think about, of course, is also the month of October, largely because in the tech sector, this season is colloquially termed as Techtober, where consumer electronics like the iPhone 12, the Huawei Mate 40, and plenty other products are currently being launched seemingly back to back. So the time has come for us to ask investors and ask analysts if this is the time to get in on investing in the technology sector, or should we wait some more? Hong Leong Investment Bank very recently have upgraded their outlook on this sector rating to overweight. Their argument is that the iPhone 12 launch was greeted with overwhelming demand thanks to Huawei's sourcing woes and spending diversion from tourism to consumer electronics. Hong Leong argues that the iterations supercycle is expected to boost those who are in the supply chain. And as you know, Malaysia and Malaysian companies and companies that are listed on the Malaysian bourse are directly or indirectly involved in the supply chain of these kind of sector. So joining us today is Tan J. Yang, the senior analyst of the telco and tech sector, to describe to us a little bit more about what they mean about this sector. Welcome, J. Yang. Let's start with the main reasons why your house has upgraded this sector to overweight. Perhaps you could explain to us some of the reasonings, some of the thinkings that go behind your firm trying to upgrade this sector to overweight.
Yes, you are right. We are very positive on the tech sector in the in the domestic scene. We have recently upgraded the sector from neutral to overweight. We expect tech sector to experience multi-year earnings growth supported by fundamental exponential demand, such as 5G, Internet of Things, artificial intelligence, cloud computing, autonomous driving, and etc. So far, our forecast for the companies under our coverage, we think that they will see multi-year growth, not to mention the upcoming quarterly results. We will probably see all-time high earnings.
Let's talk about sustainability of this multi-year growth. Do you believe that the pandemic, for instance, and also disruptions towards all the other stuff, towards business lines, supply chains, and other involving factors are going to adversely impact this view?
I think so far, as what we can see, since March, the outbreak of the pandemic, we see that the supply chain is sustainable. We continue to see higher demand, not to mention coming from work from home activities, as well as more demand for other electronics.
What is your forecast for the majority of companies that are currently listed in this sector?
From the semiconductor segment, we cover about 5 companies, and all of them are showing growth. I think recently Vitrox and Unisem has reported their earnings. Vitrox has reported all-time high earnings. Unisem last Friday's result was also a blow-up quarter. And for other companies like Franken, Inari, and UWC, we also expect them to deliver good results. And all of them, we see that their upcoming results are going to be stronger and stronger.
And so how do you tactically position yourselves in favor of this? What counters, on top of the one that you mentioned, would be some of the top picks, not just in the semiconductor sector, but of course the tech sector overall?
Generally now, after the last Friday's Unisem result, we have also upgraded Unisem to buy. Currently, we have 4 buys and 1 hold. The buys are Franken, UWC, Inari, and Unisem. And Vitrox is the new one we have a whole call.
All right, let's deep dive into some of the counters that you mentioned. Let's look at Franken, Inari, UWC, Unisem, Vitrox. What will be some of the key factors between one over the other?
Tactically, we like those semiconductor players who are actually in the front end of the semiconductor supply chain, such as Franken. We expect it to deliver multi-year growth ahead on the back of sustainable global semiconductor outlook, robust fab investment. It is also positioned itself in a leading-edge technology such as the 5 nanometer, and the company is capable for 3 and 2 nanometer as well. It has strong balance sheet to support its Taiwan semiconductor business expansions. We also like UWC. We also have a buy call on UWC as it has increasing exposure to the semiconductor front-end supply chain. As for Inari, although it's not a front-end semiconductor player, but we think that it will ride on the iPhone 12 super cycle. And we think that it will bring the demand for its product will bring it back to its glory days.
All right. We'll go for a short break before continue our conversation with Jay Young. Don't go anywhere. Welcome back. This is Notepad. I'm your host, Ibrahim Sani. We're talking about the technology sector and the semiconductor sector and what would be some of the ideas that you can think about if you want to invest in this sector. Joining us is Senior Analyst of Technology at Hong Leong Investment Bank, Tan Jay Young. Tan, we were talking earlier just now about the iPhone super cycle that you mentioned. Of course, there's going to be a lot of demand. The iPhone 5 is driven by 5G. Of course, the Huawei phones, the Samsung phones are also there. And we're not just talking about the phones per se, we're talking about so many other elements inside the consumer electronics sector. There's also mega industries that is pushing forward this sector as well. My concern, of course, is the shipping and logistics argument here. What about shipping and logistics capabilities? Do you foresee any disruptions to this because of the pandemic or any other external factors?
Although we saw some logistical hiccup in the beginning of this year, especially coming out from China, but so far I think everything is very much under control. I think so far we have not heard any complaint from the companies that they are under our coverage. Everything seems to be smooth sailing. Okay,
and let's talk about some of the new entrants, new players coming into the scene. Do you foresee any players trying to get listed? As I started the show earlier, there was some buzz going on in the market because of Mr. DIY, and maybe people might not be interested so much in the business of Mr. DIY, but at least the IPO is striking some interesting conversations amongst your circles. How do you foresee new entrants coming into the market? Is it even possible during this time of the year?
I think potentially, yes. Probably the US and China trade war may spur some interest of new, might spur some possibility of new entrant. Mainly due to the US customers are all avoiding outsourcing their products to China, and probably this will entice some of the new players from coming up, especially from the Southeast Asian market.
Okay, very interesting. Do you think any other political issues are going to disrupt, I guess, the movement of the technology sector? We've seen how the US politics is actually dominating the whole conversation of the US-China trade war that you alluded earlier. Do you think that this will continue, this level of uncertainty?
Yes, definitely so. We think that definitely the supply chain will be decoupled. US and the rest of the world will have their own supply chain, and China will also build their own supply chain to be self-sufficient. So eventually there will probably be two ecosystems in the world.
Yeah, drawing this conversation back home, 5Gs, of course, have been talked about since last year extensively. The telcos have been quoted in the press saying that they are ready to be going on live. We've seen how the government has launched a lot of initiatives, Jendela, for instance, one of them, and there's a lot of initiatives trying to get a lot of 5G, I guess, centers up and running in the country before they roll out nationwide. What would be some of your thoughts regarding 5G rollout in Malaysia?
Although technology-wise, 5G is ready, I think for Malaysia specifically, I think we need to focus now on the spectrum. Spectrum now, government has pushed the award to somehow towards the end of 2021, and I think if the spectrums are not forthcoming, I think 5G rollout will be rather difficult. Having said that, I think that also depending on the telcos whether they would want to refarm their existing 4G, 3G, or 2G spectrum for 5G. So we will wait and see.
Okay, and some of the notes that you shared prior to this interview talks about the neural network engine as well as the A14 bionic chip of Apple. People are interested to learn more about the companies that are involved in the creation of these chips. Do you think that these companies can continue to supply Apple what they need? Because Intel, for instance, have moved away, Apple have moved away from Intel, and they have tried to argue that some of the suppliers are not keeping up with their demand. Do you feel that the suppliers, for instance, the ingredients towards the component makers of A14 bionic chips and stuff like that, they're going to be able to keep up with the demands of Apple and all the other big tech companies?
I think from the supply side for the A14 bionic chip as well as other iPhone 12 components, I think there should not be any shortage. I think, as for example, TSMC, which developed the A14 bionic chips, they are continuously expanding their capacity, although the demands are catching up. As for other components, I think for other players, they do have sufficient capacity to handle the demand.
All right. Okay. Final thoughts, Jay Young?
We continue to like this sector. After we upgrade, we think that unlike glove sector, tech will see multi-year growth in terms of earnings. I think the expansion in this sector is more sustainable.
All right, thank you. That was Tan Jay Young, the senior analyst of telco and tech at Hong Leong Investment Bank. Stay tuned. We have plenty of items more to go through in this episode. But for now, we'll go for a short break. When we come back, we'll discuss a little bit more about the tech sector and the semiconductor sector business. Don't go anywhere. Welcome back. You're with me, Ibrahim Sani, and this is my show, Notepad. We want to recap again into the conversations that we've had with Tan Jay Young of Hong Leong Investment Bank. Some of the companies that he mentioned, of course, include Inari Emerton, where he views, or the Hong Leong Investment Bank views that this company argues that turns to be a little bit more bullish and they are a little bit more confident on its outlook. They say that for the next few years, the earnings are going going to be raising by about 17 to 19%. So that's a company that you can think about. Of course, when we look at some other companies in the coverage of this company, of course, is UWC as well. They argue that with increasing exposure to semiconductor front and supply chain and solid demand for its products, Hong Leong argues that they want to increase the earnings for the next few years by 4% and 17% respectively for 2021 and 2022. Another company, of course, is Unisem. Hong Leong argues that despite the trade war and COVID-19 risks, prospects are likely to improve with the closure of loss-making Batam plant, the strengthening of the US dollar, the gradual synergistic relationship with other companies. So because of that, Hong Leong says that they increase the financial year 20 to financial year 2022 earnings by double digits, i.e. by 32%, by 30% and 29% respectively in 2020, 2021 and 2022. They argue that the rollover valuation from the financial year for next year to mid of 2021 earnings per share on the back of unchanged PE multiple of 20 times. That's a company that they want to think about as well. Of course, Vitrox, following their Hong Leong's thematic report titled Galvanizing Growth for EMS, dated 24th September this year, they opine that the global CM and EMS large-scale relocation, expansion and order diversion activities are expected to create a big demand for its products. And because of that, Hong Leong tweaks their projections for the next few years to be 7%, 22% and 41% for the years 2020, 2021 and 2022. After they roll their valuation from 2021 to mid-2022, coupled with higher PE multiple of 35x from 30x. The target price for this company is actually quite higher at 11 ringgit 45 cent, which was previously at 7 ringgit 17 cent. As such, their rating is upgraded from a sell to hold. So those are the kind of ideas that you can think about when you want to look into this sector. Remember, past performance do not reflect future performance. Also remember that there's a lot of disclaimers that is in the analyst reports such as this. So be sure to get your hands on as many resources that you can get. Invest wisely and also invest responsibly. This is a time of pandemic. It's not going to be easy trying to get resources or financial resources, that is, for yourselves. So ensure that you are fully aware of the risks and also the opportunities involved in this sector. And of course, that's it for this particular episode. Remember, you can watch this episode on your mobile devices. Just simply download the Astro AWANI app wherever you get the application, either on the Google App Store or the Apple App Store. For now, thanks very much for watching. Until next time.